Hello, good afternoon and welcome to your stocks on CNBC-TV18, coming in live from CNBC-TV18 Motilal Oswal Studios. Thank you so much for tuning in, and I'm Vinny Motiwala. We'll take you and solve all your stock-related doubts with our experts today. And joining us today on the show, we have independent market expert Shahina Mukadam as well as Vaishali Parekh, Vice President Technical Research at Prabhudas Lilladher, to solve all your stock-related doubts. And markets, nothing pretty coming in on that picture as well. So Vaishali, today in terms of the markets, 22,700 now, that's where the Nifty is at. It's below the 22,800 level today. Levels to watch out for, Vaishali.
Yes, hi, good afternoon, ladies. So yes, market has become quite at ease actually. It's unable to make a trend. Right now, I would say now 22,720, that has been the level which has been tested time and again, and from there on we see a bounce. But today, I think, Reliance is getting into some selling pressure once again. It is overall the pharma, the IT pack, which is showing some weakness. So we need a good selling coming from almost all frontline stocks, which would trigger a further sell. So right now, let's wait and watch. The bias is a bit corrective. There is the word of caution. 22,700 is now the final level to watch. If that is what we break, then we are seeing a downslide, or else we would just say it's a sideways move and wait and watch till 23,000 is the resistance.
Okay, sideways moves, 23,000 is the resistance. Keep an eye out on those levels over there. But on that note, let's get started with all those stock-related queries. The first query for today, we have Mitesh Parmar, who's writing to us from Rajkot, holding 100 shares of Titagarh Rail, and this is at a price of 1,600 rupees per share. Currently, the stock is halved almost. 784 is what it's trading at. Now, he wants to know if he should continue to hold this or look to sell this at the current levels. Shahina, let's start with Titagarh Rail. We have seen that, railway stocks, a lot of the coverage systems are coming into place. A lot of orders these companies are getting. But we've seen the stock actually start seeing a fall, especially coming in from last June sometime. What is the outlook overall on the fundamentals for Titagarh Rail, and what would you advise the viewer to do?
Well, I would advise that he continues to hold. You mentioned order book. So order book is very good. They have got more than 13,000 crores in hand of order book. So that is not the issue. The issue that we are seeing in the last, say, 3 quarters, 9 months, is that the execution has not been able to keep up to the mark, and we are seeing disappointing numbers. And on back of it, if you see, even the stock price has corrected by more than 40% if you take it in over a couple of months. So all in all, the investor has actually, it's difficult to make money in such a combination of events, but I would believe that at the current level, it makes sense to continue to hold because as we know that there is a absolute commitment by the government that there is going to be an increase in capital expenditure over the next couple of quarters, and whatever slowdown we've seen in terms of execution, in terms of the slowdown in Vande Bharat trains, other trains, and also the safety measures for railways, all those things, orders will pick up and execution will pick up. So I think one can continue to hold, and you can hold it with a stop loss if you like, but otherwise I would say it's slightly risky, but hold.
Slightly risky, but hold. Execution has been a concern in the last few quarters. So we'll watch out for that, and if execution picks up, maybe we could see some bit of an improvement here. But Vaishali, on the technicals, what's your view coming in? Because almost the high for Titagarh Rail was around 1,800 levels, right? And the viewers bought it at 1,600. So it's near those peak levels. Now it's halved. What is your view on the technicals?
So I would say, yes, there is very good retracement taken place, and I think the stock is already in the oversold zone. But it's very hard to tell exact support levels. But I would say for a longer term scenario, one should start, in fact, adding more if the stock were to go further down towards 700 levels. Add more to average out your cost and wait for a turnaround, and you'll get your good returns.
Okay, wait for a turnaround and continue to hold the stock. That's the view coming in from both our experts. Let's move on to the next query for today. Shubhankar is writing to us from Thane. He's holding 16,000 shares of Central Bank of India. This is at a price of 49 rupees per share. Wants to know the long-term view on this one. He's ready to hold this for 3 years or more as well. What should he be looking out for now? And should he add more stocks at the current level as well? Shahina, what's your view on Central Bank of India? Is this one of the stocks that that the viewer should hold, or maybe, get out of it and look at some other name, even though he has a long-term view?
Well, there are a couple of positives as well as negatives. The positive being that the government has recently said that they are going to allow some of these five PSU banks to raise funds through QIP. Now, about 2,000 crores each. The government has about 93% equity holding in Central Bank of India. So, while, on the operational front also, things are okay. Valuations not expensive, 1.2 times price to book. Everything seems to be okay. But that would not be my topic in the PSU space, but for the fact that we don't know exactly who is going to pick up the stake, if at all the government disinvests, and whether it will be a stronger hand or not. So my best bet would be either you switch to a strong large cap bank, or you hold with a strict stop loss, because this is going to be news driven in terms of stock performance.
Okay, keep a stop loss specifically because it is mainly right now news driven is what Shahina is saying, and maybe we could see some bit of a move on that front. Vaishali, your view on the technical front for Central Bank of India?
I think technically, when I'm looking, since the view is for a longer term period, I think it's quite well placed. I don't see any worry in this stock, because once you see when PSU banks start picking up, I think this stock can again go towards 65, 70 levels. So according to me, it is a hold.
Okay, hold coming in for Central Bank of India from Vaishali. Let's move on to the next query for today. We have Prasanna Chidambaram, who's writing to us from Chennai. He's holding 18 shares of Berger Paints, and this is at a price of 618 rupees per share. He's holding them since 2021. Okay, so now he's a long-term investor. He wants to know if he should continue to hold or look to sell this one. China paint sector and paint stocks overall also have been under pressure. We're not seeing that pickup in momentum, demand trends actually shaping up for the paint sector as a whole. Berger Paints, as your view, what should the viewer do now? Hold, sell?
Well, the year again paint sector was also disappointing, as well as you saw the numbers also. They have shown an increase in volumes, but at the cost of, softer prices. Raw material prices also were pretty elevated. So we've seen quite a disappointment in numbers in the past. Having said that, I think with the government having left more money in the hands of the middle class, taxpayers, discretionary spend and the paint sector is likely to show some bit of momentum going forward. If there is a stabilization price and volumes are able to move up, I think the remaining next couple of quarters should be better. The stock having corrected, I think valuations are not cheap, but given the quality of management, I would believe that one can hold it for now, keep a stop loss, and then look for a bounce to switch.
Okay, and Vaishali, what's your view coming in on Berger Paints? Is a suggestion of even averaging a good bet right now for Berger Paints, or they should just hold or sell?
So I think, according to me, technically, if I were to look at the stock, the worst is really over. And well, right now it is at 489 level. So if one has to average out, I think 470 is a good ideal level to get into. And my technical range comes to around 470 as the support, and 460 was the low. I mean, that's what we had seen. And 520 is the near-term resistance. So one can have a relook at 520. But according to me, I think both Asian Paints, Berger Paints, both look quite okay. I don't see much of a corrective move coming from here on.
Okay, surely watching out for that. But let's move on and to the next query for today. We have Swapnil, who's writing to us from Pune. He's holding 38,000 shares of IRB Infra. This is at a price of 51 rupees per share. Wants to know if you should continue to hold or look to sell this one. What is your view coming in on this one, Shahina? For January, the toll collection seemed like it was up for 19% for that month, and the company has also highlighted how momentum is expected to continue. So IRB Infra, what is your view coming in? Do you think the view should continue to hold this?
Yeah, I believe that, at current levels, it makes sense to continue to hold. As you mentioned, they are showing very good momentum. It's been over the last couple of months, actually. They've shown a good jump in the toll revenues. And, with more than 34% market share, they are the largest in the sector. And they've got a big order book, huge order book. Actually, their order book is around 32,000 crores, which is actually, even if you look at the execution over the next 2 years, the management has indicated it will be more than 10,000 crores. So basically, the upside is there. The balance sheet, while there is debt on the books, quite high, but I think it is pretty stable, and they will be able to manage the growth without dilution. So I would say that an investor can continue to hold.
Okay, investors should continue to hold IRB Infra. And your view, Vaishali?
So I don't see any problem with this stock. Of course, like all stocks, this too has seen good corrective move. But when I'm looking at the weekly as well as the daily chart, I think 45 has been the strong base. So as long as 45 levels are held on, I think the stock can bounce back to good levels. And if not, I mean, these are the opportunities when stocks really correct like this. These are the opportunities to average out or keep adding these stocks. So I would say just stay put. 45 is the level to watch. The view gets negated if 45 is broken, but till then, hold on and add more.
Okay, hold on and add more. That's a view coming in from Vaishali. But on that note, we're going to slip into a short break. And as we slip into the break, here's some good news coming in for you. India business news leader is now a click away, introducing CNBC TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC TV18 app now from the Apple Store or Google Play Store, or you can just scan the QR code on your screen. Welcome back, and thanks for staying tuned into your stocks on CNBC TV18. We still have our experts with us to solve all your stock-related doubts, Shahina Mukadam as well as Vaishali Parekh. Let's move on to the next query, ladies. This one is coming in from Sandeep Reddy. He's writing to us from Telangana. He's holding 350 shares of Swiggy. This is at a price of 565 rupees per share. Obviously, the stock is currently at 364 rupees per share. Wants to know the long-term view on Swiggy, and also wants to know whether you should currently look to hold or sell at the current levels. What's your view coming in on this one, Shahina? You know, given that it's a recent listing, Zomato has been there for a while, but with Swiggy versus Zomato, what should the viewer do right now?
Well, I would suggest it's better to be with the market leader. So Zomato would be my pick. So I would suggest switching to Zomato. In fact, in an earlier segment, I believe Mangalam has explained very nicely how these guys are losing market share to some of the QSR segments, companies, and they're seeing some softness in the GOVs going forward. So also, I think in quick commerce, there is a lot of competition, and this is affecting the margins, which we saw in the third quarter, and that is not likely to change in the near term. Also, being a new listing, we have that overhang of potential selling over the medium term from original investors. So what I would suggest is to switch to Zomato, or to some other stock, but I would exit.
Okay, you would exit Swiggy. That's the word coming in from Shahina. Vaishali, I know you don't have much on the technicals to judge it, but any view on Swiggy?
Well, I think it is showing signs of reversal. So I would say to those who are holding, keep a near-term stop loss of 340 and wait for a target of 440. This is the level where we can have a relook and compare it with Swiggy and then take a call. But for now, not in a hurry. Hold with a stop loss 340 for 440.
Okay. Next query for today is coming in from Nikita Nagpal, who's writing to us from Mumbai. She's holding 200 shares of Newgen Software Technologies. This is at a price of 1,400 rupees per share. Currently, the stock is at 976 rupees per share. Wants to know whether she should continue to hold or look to sell this. Your view on this one, Shahina?
I would say switch or exit. That would be my view. Here, the valuations are extremely expensive. It's a smaller IT company, small cap, and valuations, if you look at it, EV by EBITDA is 30 times. And if you actually, correlate it with the numbers are really disappointing. If you go with the last quarter numbers, they're seeing a slowdown in the India business. So I would say you should exit. Better to be invested in some large cap IT as of now.
Okay. better to look at large cap ITs and, get out of the stock is the word coming in from Shahina. Vaishali, your view on this one, because in the last 1 month, we've seen the stock specifically see a correction coming in. So does it make sense to hold this average, sell? What's your view?
So I would say, of course, when there is a bounce back coming in, these stocks are going to take a while to really show some momentum. So I would say go into better stocks like probably, why not TCS, Infosys. In fact, even Keynes Technology, from what we are seeing today, it's showing a lot of strength. So I would choose these stocks.
Okay. Maybe you would look at some other names coming in there. But let's move on to the next query for today. We have this query coming from Rohit Kumar, who's writing to us from New Delhi. 200 shares of Raymond is what he's holding. This is at a price of 2,065 rupees per share. Since September 2024 is what he's holding the stock. Wants to know for the long-term perspective, your view on Raymond. Shahina?
Well, yeah, unfortunately, the investor bought it just after the demerger of the lifestyle from Raymond Limited. But nevertheless, from current levels, I believe in terms of valuation, if I compare it with other real estate companies, now this Raymond Limited has both the real estate as well as the engineering as of now. Real estate is expected to be demerged pretty soon, next couple of months. They have got the approvals. Most of the approvals are in place. So there you will have good value unlocking, because in terms of the business potential, they have got huge land parcels still at Thana, which actually is estimated to generate around 7,000 crores of revenue. They have got other 4 tie-ups, joint ventures in Mumbai for redevelopment, which is quite a big, which is a sizable revenue potential over the next couple of years. And in terms of valuation, it is below, it's around 9,500 crores of market cap. So even if you look at a revenue from real estate, just real estate, around say 2,500 crores, which is absolutely doable in a year, I believe that valuations look attractive and value addition. You will have some value unlocking with the demerger. So you hold as of now, and in fact, I would say you could also, if you see any dip, you could also add and average the cost.
Okay, that's the view coming in on Raymond. Maybe some value unlocking is also what we could watch out from the real estate side, is the highlight coming in there as well. So could continue to hold. Vaishali, your view on Raymond Limited. What should the viewer do right now?
Well, we have seen good erosion in this stock as well. And I think currently it is at a very good support level. So I would say take 1,300 as a support, and I would strongly advise that average out at these levels, because in all likelihood, this will retest the levels of 1,900 to 2,000 for now.
Okay, let's move on to the next query for today. We have Vignesh Iyer, who's writing to us from Telangana. He's holding 75 shares of Trent at a price of 7,301 rupees per share, currently making a loss on this one. Wants to know if he should continue to hold, sell, average. Your view on this one, Shahina?
I would say hold, do not average as of now, simply because the valuations still remain expensive despite the correction. And we've seen some bit of slowdown coming in the last quarter. Of course, the growth, if you look at it on an overall 9-month basis, is very strong in terms of both revenue as well as profitability. So over a longer term period, maybe 2 years, 3 years, valuations will start again coming back into looking interesting and attractive. But at the same time, I think it will go into a phase of consolidation. They have a lot of initiatives, new store addition, so I would say hold with a long-term view.
Hold with a long-term view. That's the word coming in from Shahina. On the technicals, Vaishali, Trent, what should the viewer do? Last 6 months, yes, we've seen a bit of a correction like Shahina was mentioning, but valuations still seem expensive. That's a concern she's highlighting. Charts indicating anything different?
So chartically also, of course, this has seen good corrective move, but I don't think this is the end of the correction. If market were to correct further on, or if the stock was to see further weakness, this is likely to go towards 4,500 levels. And in my opinion, that would be the level that one can add, because the buy price is way too above. So I would say average out at 4,500 levels.
Okay, 4,500 levels is what you're expecting, and one could average out at that level because the buy price is higher. That's the view coming in on Trent from Vaishali as well. But okay, that was the last query for today, ladies. So thank you so much, Vaishali as well as Shahina, for joining with us on the show, and a happy weekend to both of you all as well. But with that, viewers, we're going to wind down this edition of Your Stocks on CNBC TV 18. Thank you so much for tuning in. Up next, your closing bell.